If you earn your income on a 1099 and someone has told you you can't qualify for a mortgage, I hear that story all the time. And the truth is, in most cases, it's simply not true. There are loan programs specifically designed for people who earn income on a 1099 form. Programs that don't require tax returns, that don't penalize you for writing off business expenses, and allow you to qualify using the income you actually earn. In this video, I'm going to walk you through exactly how the 1099 mortgage loan program works, who it's designed for, how income is calculated, and what you need to qualify for the loan. Hello, I'm John Thomas, loan officer with Primary Residential Mortgage, and my team and I have helped hundreds of self-employed borrowers across Delaware and Maryland get into homes using programs like the 1099 loan program. So if you're a 1099 earner, real estate agent, consultant, contractor, freelancer, or commission salesperson, this video is going to answer a lot of the questions you probably already have. The problem most 1099 earners run into. Let's start with the issue most self-employed borrowers face. Traditional mortgage underwriting relies on your tax returns to calculate your income. And if you're self-employed or earning income on a 1099, you already know what that means. You deduct expenses, marketing expenses, mileage, equipment, insurance, office costs, anything you can think of. And you're supposed to do that. It's smart tax planning. But here's the problem. Traditional lenders qualify you based on your net income after deductions. So if your business earns $120,000 in gross income, but your tax return shows only $45,000 after expenses, a conventional lender qualifies you based on that $45,000. That's where a lot of self-employed borrowers hit a wall. You make good money, your bank account shows it, but on paper, it looks like you earn much less. That's exactly the situation 1099 mortgage loan program was designed to solve. So what is the 1099 mortgage loan program? The 1099 mortgage loan program is part of a category of loans called non-QM loans or non-qualified mortgages, which simply means they fall outside of traditional Fannie Mae and Freddie Mac guidelines. Instead of using tax returns, this program allows us to qualify you using your gross 1099 income, not your taxable income, not your Schedule C income, your actual earnings reported on your 1099 forms. That's the single difference. It's often the gap between being declined by a traditional lender and being approved for a mortgage, and the program's available for purchase, refinance, even cash out refinances. You can purchase second homes and investment properties with loan amounts up to $3 million. Who's the 1099 program designed for? The borrowers who typically qualify for this program are independent contractors or commission-based professionals. Some of the most common borrowers we work with include real estate agents paid on a 1099, mortgage loan officers working on 1099 commission, independent IT consultants, tech contractors, freelance designers and marketers, gig economy workers like Uber or DoorDash drivers, travel nurses on contracts, sales professionals on straight commission, tradespeople like electricians, plumbers, HVAC contractors paid on 1099, financial advisors and insurance agents paid as independent contractors. Really, anyone who receives income reported on a 1099 instead of a W-2. The common theme is simple. You make good money, but traditional lenders don't see the full picture when they look at only your tax returns. A quick message for real estate agents. I want to speak directly to real estate agents for a moment because you are actually one of the largest groups of borrowers we help through this program. Most agents are paid on a 1099 by their brokerage. Your commission income might be very strong, but when you go to your accountant, you deduct all your taxes, your marketing expenses, your MLS fees, your E&O insurance, your mileage, everything else required to run your business. Your tax return may show a fraction of what you actually earned. Conventional lender sees that net number and declines the loan. With the 1099 mortgage loan program, we use your gross commission income reported on your 1099s. That difference alone often allows agents to qualify when other lenders said they couldn't. How is income calculated with the 1099 program? This is the question I get most often. So let's break it down. With the 1099 mortgage loan program, we look at the gross income reported on your 1099 form. Typically, we review 1 or 2 years of 1099 forms. In some cases, a year-to-date earnings statement may be required, and sometimes recent pay stubs or additional verification, depending on the situation and how you're paid. Let me give you a quick example. If your 1099 shows $120,000 in gross income, but after deductions, your tax return shows $45,000, traditional lender qualifies you based on the $45,000. With the 1099 program, we will qualify you based on the $120,000. That can drastically change the loan amount you qualify for. And during our first call, we walk you through the numbers with you so you understand exactly how the income calculation works for your specific situation, because we are going to deduct some business expenses. So basic 1099 mortgage loan guidelines. Here's the general qualification guidelines for this program. Minimum credit score is 600. Although better rates become available as your score does increase and you can have less down payment. You generally need to be earning 1099 income for the same employer or source for at least 2 years, but we do have the ability to do 1 year. Down payments start at 10% with good credit. Loan amounts can go up to $3 million, and the program works for primary residence, second homes, and investment properties. One of the most important points, again, tax returns are not required. Instead, we verify your income using your 1099 documentation. How your credit score affects the loan. While the minimum credit score is 600, your credit score does influence your rate and your down payment. Generally speaking, 600 to 619 qualifies, but it's going to require, you're going to have a higher rate and you're going to have a higher down payment. 620 to 659 opens up better rates and less down payment options. 660 to 699 is even better. And above 700, you get better pricing and less down. So if your score is currently below 600, don't assume you can't qualify. In many cases, we can help you create a 60 or 90-day plan to get your credit score where it needs to be so that you can qualify. 1099 loan versus a bank statement loan. Another common question borrowers ask is, how does this program compare to other self-employed loan options? There are several non-QM programs available. The 1099 loan works best if your income comes from a single source and is reported on a 1099. A bank statement loan works better when your income comes from multiple sources or when deposits vary month to month, or you don't get a 1099. And a P&L loan works well for business owners operating through an LLC or an S Corp with a CPA documentation. Each program calculates income differently. That's why the first step is always reviewing your situation and matching you with the program that produces the strongest approval based on how you're paid. How the application process works for a 1099 loan. Application process for a 1099 mortgage is straightforward. First, give us a call or you can apply online. We review your 1099 forms, your credit, and your overall scenario. If everything looks good, we issue a pre-approval letter so you can shop for a home confidently, or we just go ahead and start the refinance. From there, we guide you through the process all the way to closing. Typically, the documentation required includes your most recent 1 or 2 years of 1099 forms, 2 months of bank statements, documentation showing funds for your down payment and or closing costs, government identification, so your ID, and if you're purchasing a home, the signed purchase contract. Closing timelines are usually similar to your conventional loan, so 30 days, sometimes less, but typically figure on 30 days. Now, why work with the John Thomas team with Prime Residential Mortgage? Non-QM lending is very specialized. Most loan officers working at traditional banks simply don't process these types of loan regularly, and they don't have the experience. At Prime Residential Mortgage, this is something we do all the time, and we specialize in non-QM loans. We've helped hundreds of borrowers in Delaware and Maryland navigate situations where traditional lenders couldn't find a solution. We offer a full suite of non-QM loan options. 1099 loans is just one. We have bank statement loans, P&L loans, asset qualifier loans, DSCR loans for investors. So if one program doesn't work, we can typically pivot to another program to see if we can get you qualified. If you're earning income on a 1099 and you've been told you can't qualify for a mortgage, don't assume the answer is no. In many cases, the solution is simply using the right loan program. My team and I would be happy to review your situation and tell you straight whether you qualify, what you're qualifying for, and what the next steps look like. You can call us or text us directly at 302-703-0727, or you can apply online at prmiloanapplication.com. Again, John Thomas, loan officer with Prime Residential Mortgage. Thanks for watching this video. If you found this video helpful, please subscribe and like and share so you can see our next video when it comes out. Have an amazing day.